From the contract account, the credit side is more. If you subtract a debit item, the difference we call it as a notion profit. Estimated profit into cost of work to date divided by estimated total cost into cash received divided by work certified. Notion profit into 2/3 into cash received from the contractee divided by work certified by the architecture or engineer. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 1 Session 4, fourth semester BCom Costing Methods and Techniques. So the chapter name is Job and Contract Costing. So and the last session which is related to the theory part of contract costing. And today my agenda, so contract costing problem, okay, the job contract costing problem. Okay, so you will get more clarity about the format, how it is, because the contractor, whenever they are undertaking the contractor, so each and every contractor, they want to maintain a separate contract costing. Okay, so because they want to get to know the particular contract, what they are getting, a profit or loss. So which the difference, what we are getting, credit side and debit side. No doubt, if you know the trading and P&L account, the same format. So always the debit side is an expense related. Okay, from the contractor, they are maintaining a separate store. Okay, or directly the material or plant, machinery. Okay, so directly sending for the site. Okay, the where exactly the construction work is going on. So the contract account, which is completely okay. So debit side, which is completely expense related. So because the contractor want to get to know how much they at the end of the contract, either the contract is 1 year or within 1 year or 2 years, 3 years. There are different types of format problems you are able to identify. So in this contract cost, the first one, the material to site, because the contractor, whenever they are sending a material, okay, exactly the contractee, those who assign the work, okay, the construction work is where it is going. So which is related, the material is going to the site, which is nothing but your direct expense. Okay, expense. Okay, the now material from the store. If the site from the market only, whenever the contractor are purchasing material, which is directly going for the site. Okay, so second one, when the contractor or maintain a separate store or warehouse, so from the store or warehouse the materials can be going. So that is also an expense. And the labor expense, of course, without involving the labor expense, definitely the construction work cannot be completing. So the which is related to labor, or you can say the wages. Okay, so whenever you are expecting any related example, if the wages is accrued or labor is accrued, means you have to add outstanding. Okay, now direct expense, which is related to the construction work. Okay, so hire and use a plant. Either, for example, the contractor, they don't have any equipment or plant or machinery, they can hire. Okay, so which is also going for expenditure. And next one, general overheads. So direct expense or general overheads, what and all, which is related to the construction work expenditure. Okay, and the plant issue, because whenever you are sending a plant or machinery, okay, to the site, definitely you need to treat as an expense, which is related. Okay, after usage, you have to subtract the depreciation. When we are writing this depreciation, okay, so we need to get to know that at the end of the year, okay, each contract year will be closing. Okay, each 1 year they are preparing a contract account. So, and other expense. Obviously, the notional profit, whenever the credit side is more, you are getting the difference for debit side. Okay, moving to the income side, credit side. So, once the plant work is completed, the construction work is completed, the plant, whatever it is there, which is going back to the store. So, that is nothing but the buy plant return to the store after construction work is completed, again, which is going, which is nothing but, yeah, contractor is treating like a, which is an income or asset. So by material return to the store, whatever the construction, okay, unused material, whatever it is there, again it is going back to the store. And next, plant at site, whatever the site where the contractor sent for this site. So after getting the usage, you need to take the at the end of the time what and all which is available in the site. The plant at site means again which is going back to the store. Okay, and the plant value we will get at the end of the time after deducting the depreciation. And after deducting the depreciation, okay, so the depreciation, which is nothing but because of usage, you need to deduct the value. So we will get to know the net asset value. Next, of course, always by work in progress, you have to write in the credit side, which is work in progress, which is nothing but the income. Okay, there are two classification. Work is certified and work is uncertified. What do you mean by work certified? So because the contractor, they want to get money from the contractee, so they will say, the contractor will say for the contractee, I have completed 80% work is completed. The contractee is not blindly accepting. What he will do, the contractee, they are inviting the engineer or architecture, they are taking an opinion what exactly. So the contractor, they told only 80% are completed. After certified by the architecture or engineer, so maybe it can be decreased. Okay, now work uncertified. So work is completed but certified, which is not certified. Okay, so the credit side is more, our debit side is less, means we are getting a notional profit, which is nothing but approximate. Okay, so with the help of contract account only we are identifying. The title is very important. The form of contract accounting, the name of the contract, okay, the contract price which is given in the question. Okay, so which year you are preparing a contract account for the year ended. Okay, so date is given in the question, you have to write, this is compulsory. And the under contract costing, the treatment of incomplete, okay, so the treatment of profit in the incomplete contract, because the contract is not completed, so you have to calculate the profit, okay, or loss. So here the profit or incomplete contract in the profit that has been earned on contract. Each contractor, they are estimating the profit. Okay, the profit calculation, how they are calculating. That is not at all completed because the contract is not completed. So then also we are trying to find out they are using a different methods. Okay, so there are two methods of accounting for profit of incomplete contract. The first one is a percentage of completion. So in sometime the problem they clearly specified 80% is work is completed or 80% percentage wise. Okay, so this method is a recognized revenue and cost. Okay, the revenue what the contractor are expecting from the contract and what kind of cost are billed. Okay, so the cost in proportions of the percentage of contract completed. This means that the revenue and cost are recognized as work is completed on the contract, because each and every contractor, of course, they want to identify, recognize the revenue and what is the cost and cost incurred for direct cost, indirect cost, other general overheads. Okay, so the profit on the incomplete contract is calculated as the difference between the revenue recognized, which is nothing but the credit side, and the cost is incurred, which is nothing but the debit items related. So then the less, okay, when we are getting income is less, expenditure is more, obviously we are getting a loss. Okay, when you are getting a loss, obviously the credit side, the balance will be notional loss. Okay, completed contract method. Okay, the completed contract method, because the completed contract method, this method is recognized again the revenue and the cost only when the contract is completed. Once contract is completed, so easily we can classify the income related and expense related. Okay, so this means that all revenue and cost are recognized in the period, okay, in which the contract is completed. For example, 1 year contract, 2 year contract, a few contract can be extending a more than 1 year. Okay, so each year the separate contract account is prepared. So we can try to do for the consolidated vertical format. Okay, so that is also possible. The profit in the incomplete contract is calculated as the difference between the total estimated profit, the total estimated profit, and the profit of recognized to the date. Okay, so moving forward, contract costing, whenever we are trying to calculate a cost of capital, cost of the contractor, so of course we need to find out the profit. So there are proportion of notion profit. I just know I told the proportion of notion means what, which is an assumption, which is an estimated approximate profit. So the taken into P&L account calculated, because the contract 1 year or 2 year, how many years it will take. So within that year, every year they are trying to prepare a contract costing. So here there are two situations. If the work is certified is more than. Who is certified worker? The contract engineer, the engineer on behalf of the contractee, the engineer or architecture. So they are trying to certify the work. So if the work is certified 1/4 or but less than the 1/2 of the contract price transferred to P&L account is equally, okay, now we need to find out if the work, the total out of 100%, okay, now only 25% is work is completed, but less than 50%. Okay, here 1/2, 1/4, here 1/2. Okay, so in that case, how to find out the profit and loss? The very simple, the notion profit, which is nothing but the credit side from the contract account. The credit side is more. If you subtract a debit item, the difference we call it as a notion profit. Okay, so into 1/3, which is a standard formula, into cash received from the contractee, because the work is assigned, the contract is assigned work to contractor. So actually what exactly the cash is received divided by work certified. So the work certified we can get to know with the help of question. Second condition, if the work certified is 1/2, okay, 1/2 or more than 1/2, there are two situations. Okay, one is work is certified 1/4, one is work certified 1/2 or more than 1/2. Either, for example, 50%, more than 50% work is completed, the contract price transferred to the P&L account. The formula is notion profit into 2/3 into cash received from the contractee divided by work certified by the architecture or engineer. So moving forward, the under contract costing, so the proportions of notion profit taken to P&L account calculated. Now the third one, for contract which are almost completed, more than 90% completed. So in case of contract which are almost completed, estimated profit is to be found out by the following procedure. The first procedure, cost of work done up to date is ascertained because almost the work is completed. So the till the date, the cost how much is incurred. And second one, additional expenditure to be incurred for completion of the contract is estimated. For example, because of material, because of labor, the cost is increased, means additional expenditure is paid. Okay, so the contractor is paid. So now the first two condition what we studied here, the total of A and B is estimated total cost. So with the help of estimated total cost. Okay, moving forward, fourth one, the excess of contract price over total cost is estimated profit. Excess of contract price, okay, the contract price what they quoted for contracting, so which is an excess. One of the following may be used. One of the following, okay, there are 6 formula, any one you can choose. So the first one, estimated profit into work certified divided by contract price. Either you can apply for second formula, estimated profit into work certified divided by contract price into cash received divided by work certified. Okay, so if you try to cancel work certified, work certified, what is the left? So only cash received divided by contract price. Now third one, estimated profit into cost of work done till the date, okay, last date. So divided by estimated total cost, we got just previous A and B adding. Okay, next one, estimated profit into cost of work to date divided by estimated total cost into cash received divided by work certified. Fifth one, normal profit or nominal profit, notional profit into work certified divided by contract price. And the notional profit into fraction based on the completion stage, okay, the ratio, into cash received divided by work certified. So any one, the best formula, the first one is the best formula to find out the completed work. Okay, so moving, there is one question for under simple question. A construction company has contract to build bridge for 10 lakhs. okay, the company has completed 60% of work, okay, 10 lakh 60% means now you will get 60, okay. And the as cost incurred for 5,50,000, the cost what and the cost for the construction, okay, so incurred 5,50,000. Calculate the profit on the incomplete contract using the percentage of completion of method, percentage method, okay, there are two methods, no, percentage method. So here you need to recognize the revenue, the total 10 lakhs into 60%, where they specified here 60% clearly specified. 10 lakh into 60%, you are getting 6 lakh, okay, and cost is incurred 5,50,000, okay. So now the profit of incompleted contractor revenue we are already recognized, okay, 6 lakh. And the cost incurred, if you subtract the cost incurred, the difference is 50,000, which is nothing but your profit on the incompleted contract, okay. So moving for next question. A company has a contract to provide service for 5 lakhs. The company has completed 40% of work. 40% work is completed and has incurred cost rupees 3 lakh. Calculate the profit on incompleted contract using the completed contract method, the second method, okay. So here the estimated profit, we know there is actually the company has contract provided 5 lakhs, okay. From the 5 lakhs you need to subtract the cost incurred, okay. So easily we can get estimated profit 2 lakh. After getting the estimated profit, then profit recognized till the date, okay. Now 2 lakhs is given, the percentage also given. If you multiply, you are getting 80,000, okay. Now the question is arise profit incompleted contract using a completed contract method. So profit on incompleted contract, now we got estimated profit around 2 lakhs, okay. Now profit we recognize here 80,000. From 2 lakh 80,000, if you subtract 1 lakh 20,000, which is nothing but the profit of incompleted contract, okay. Moving for the third question problem. Mumbai Construction Limited having an authorized capital, okay, 2,50,000 authorized capital, which is not at all connected for the contract account, okay. So dividend 25 equity shares into 10, then 2,50,000 we are getting if you multiply number of equity, So the commence the contract work on 1st January 2004. The constructed contract is commenced on 1st Jan 2004. And during the 2004, they were engaged on one contract on which the contract price is 5 lakhs. Now contract price is very important. The contract price is 5 lakhs. The trial balance extracted from their books, so 31st December 2004 at the end of the year, should as under the capital, authorized capital, okay, we know 90 is each price, the actually paid is 9. 10 rupees is the face value, 9 is paid, okay. So the number of shares, if you multiply directly, the information is given 90,000, which is a question. Now sundry creditors 10,000, a land and building cost 40,000, cash at bank 3,000, contract account material 80,000, plant 30,000, wages 1,02,000, expense 5,000, cash received being 80% work is certified, the cash received from the contractee, so 1,60,000, which is an excluded. Now we need to include. Apart from the few adjustment, out of plant and material charged to the contract, okay, whatever the plant and the material is available in the trial balance, apart from this, plant and material charge for the to the contractor, the plant costing 4,000 and the material costing 3,000 were destroyed in the accident, which is an abnormal loss faced by the contractor. Okay, so whenever abnormal is coming, always you have to write in the contract account credit side. Okay, so at the time of writing the preparing a contract account, so you have to write a credit side. So on 31st at the end of the year, because the contract is commenced on 1st Jan 2004, the end of the accounting year means 31st December 2004. So plant which cost 6,000 was returned to store. At the end of the contract is completed, the 6,000 was the plant cost was returned to the store, because after completion of work it will return to the store. Okay, the value of material on site, which is a closing stock after unused material. Okay, so 31st December 2004 was 3,000, and the cost of work done but not certified. Work is already completed but not certified is a 4,000. Okay, so on the same date, because everything, there are two work in progress, there are two. One is work certified, work is uncertified. Okay, here the charge 10% depreciation on plant. Okay, prepare contract account and also prepare balance sheet. If they are not specified which method of depreciation, means we'll straight away will consider for the original cost method. Okay, so they are not specified in this question, so directly we need to select the which method. So suitable is original method. If they are not specified, you have to consider for original cost method. Okay, moving for the, now we need to prepare, see with the now they are asking to prepare contract account, okay, in the name of contractor, as well as the balance sheet of at the end of the time. Now Mumbai Constructions Limited contract account for the year ended 31st December 2004. Okay, so particular almost all the expense credit side is which is an income. Okay, the first item from the trial balance, material 80, plant 30, wages 1,02,000. Okay, expense 5,000. This all direct expense. Okay, so your material 80, wages 1,20,000, 2,000, 1,02,000, plant is 30,000, expense is 5,000. Okay, so apart from this, so here we are getting at the end of the time, that is a balancing figure. Okay, now work in progress. In the question they clearly specified cash received being 80% of work certified 1,60,000, which is an excluding. Now we need to include, so that's what we are doing. So work certified 1,60,000 we received cash. So reverse we are doing. In the numerator 100 divided by 80, if you do 2 lakhs is a work certified. Okay. Okay. Now there is a contract price. How much is given in the question? So the contract price, okay, the contract price is 5 lakh. Okay, now work certified 2 lakh. Now uncertified work is not certified, because in the question clearly they specified. See the 4,000 here, this one. The cost of the work done, already done, but not certified 4,000 in the same date. So we need to show here 4,000. Total work certified and uncertified together, if you take the total 2,04,000. Okay, now moving to by P&L account. By P&L account, why we are doing? Because we need to carry, because the value of the asset, value of the material are reduced, value of the plant because of depreciation reduced. The first one, plant. The plant cost, how much is given in the question? The plant cost 30,000 is actually in the trial balance, and there is one more plant. Okay, here 4,000, because we are getting a loss, right? Loss means credit side. Okay, because of accident or destroyed, 4,000 material plant cost and material 3,000 cost, we are facing a loss. Abnormal loss means always you must show in the credit side. Abnormal loss because of fire, because of theft, because of stolen. Okay, in case of theft, abnormal loss, you have to show in the contract account. Credit side is compulsory. Okay, so that's what I have specified here under P&L account, because we are facing a loss. Which loss? Abnormal loss. because of plant value 4,000, material value 3,000. Altogether, we are getting total loss is a 7,000. Okay. Now, next, after completion of work, this contract is completed. Okay. Now, the material, whatever it is left, the plant, whatever, after deducting the depreciation. Okay. The plant returned to the store. Year 4, plant which was 4,000 was returned to store. Okay, returning, because which is going to the store, which is not a loss actually. So that's what here the return to the store is a 6,000, which is clearly given in the questions, 6,000. And you have to subtract the depreciation because the plant is going for the usage, right? So you have to reduce the depreciation 10% on the original cost method. 6,000 into 10% means 600 after subtracting 5,400. Okay. So next, material at site, the information also given. Material at site, the value of material on site 30 last at the end of the date is 3,000. So that is also going back to the store. So that's what we need to specify here. Whenever it is going or credit side, whenever we are issuing for the contractor, so debit side. So which is going back to the store for 3,000. Next, there is actually, now we need to find out actual plant cost, because the plant there are, see now 20,000, there is one work note, how we are getting. See the actual plant in the trial balance given 30,000, the depreciation we need to subtract. The depreciation because of loss 4,000 we need to subtract. There is a loss because of destroyed. Okay, actually original cost is 30,000, 30,000 minus the destroyed. Okay, so the after destroyed, the 26,000 is valued. Now the plant is returned 6,000. Actual cost now till the date of end, last date 20,000 is a value. Again we need to 20,000. The plant at the site 20,000. Again depreciation 10% means because they clearly specified in the question 10% on okay, original cost they are not specified, diminishing cost they are not specified. If they are not specified, we try to do for the original cost method. After deducting 2,000 we are getting 18,000. Now credit side is getting total 5,66,000. Just we need to copy here. Okay, from this we need to subtract all these 4 items. Now we are getting 20,400. So after getting the balancing figure, now we need to calculate, because the work is certified okay 80%, right? So that's what the formula I have clearly specified in the previous slide. So 20,400 into 2 by 3 into 80%, so we are getting 10,880, and after subtracting 20,400 minus 10,880, the remaining balance will go for the reserve. Okay, so in the reserve, while you're preparing the balance sheet, which is going for the reserve. Now moving to the balance sheet, so whatever the Mumbai Constructions Limited balance sheet as at 31/12/2004, asset side in the trial balance they clearly given the trial balance. Land and building 40,000, cash at bank 3,000. Okay, credit side 10,000. Okay, equity shares 90,000. Whatever which is related to balance sheet item. Okay, first one, land and building which is given 40,000 in the trial balance. Plant in store, because we transfer to we have send it back to the store 5,400. And plant at the site, plant in store 4,000, 5,000, and here 18,000. The current assets category is given trial balance, cash at bank 3,000, material at site 3,000, work in progress we got total work in progress certified and non-certified 2,04,000. So for this, from this we need to subtract the reserve, what we are getting the difference of in the contract account we need to subtract. So then finally we are getting 1,94,480. So 1,94,480 we already received from the contractee advance 1,60,000. The difference 34,480. Moving to liability side, the share capital in the trial balance given 90,000, which is going for the liability side. And the reserves and surplus we calculated. So the profit and loss from the notional profit, what we calculated here, 10,880 we got in the contract account. And the loss on the plant and machinery because of destroyed in the fire. So we face loss. One is plant as well as material. So we need to subtract the difference amount 3,880. Okay. So last one, current liability. So sundry creditors, one item. Okay. Altogether, if you add, we are getting 1,03,880 both side. Keep on watch for next section. Thank you.